In today's tutorial, we're going to talk about different types of trend bars and what they mean when you're trying to enter a trade. First, we're going to talk about continuation bars. These are the types of bars that tell you that the trend is going to continue as it's been going. First, this is a strong bull trend bar. So it's just a large bar that you find in the middle of a trend. You can see in this example that I have right here, we've been in a bull trend upward. And this is just a bar that is fairly large in size compared to the other bars. So that's telling us that the trend is strong. Same thing in reverse for a bear trend. We just have a downward trend right here. And so this bar right here, which is a pretty substantial size, tells us that this trend is strong and it continues down for a ways. This one would also be a strong trend bar. The only thing is it has longer wicks on the tops and the bottoms, so it might not be like as perfect of an example. A more perfect example has smaller wicks. Now, those are continuation. That just means the trend is continuing. What about when the trend is going to change? That would be a reversal bar. And it's basically just a signal bar that tells you a change in trend is possibly starting. And whenever we say a change in trend, it's important to note that it doesn't just mean going from bull to bear or from bear to bull, although those are possibilities. But it could also be that we're going from a bear trend into a trading range or from a bull trend into a trading range. Those are all reversals. And I show you some examples of reversals here on this screen, but we're going to go through these examples in details. So here is a bull reversal bar. There is not a lot of overlap with the prior bar. So it is kind of like a smaller bar compared to the prior bars. There is little to no top wick, but there is a pretty big bottom wick that is 1/3 to a half the size of the previous bar. So here is our first example on the right you'll see that the bar is the opposite. So we had a bear bar or a red bar down, and now we are going up. It's a green bar or a bull bar that is going up. And that's kind of the, I guess, stereotypical type of bull reversal bar. But it's also possible that you could have one like over here on the left where you have a red bar. So it's still a bear bar, but it is kind of giving us a hint that we might start to see bull bars come up next. And in this case, that's exactly what happened. So they have long wicks on the bottom, not a lot on top, and they're just kind of smaller bars. Now there are some people and like there you can learn names for all of these things. Like each one of these will have a particular name. But from what I have found, the names don't really matter. So I don't know. I mean, I guess they could matter if you were communicating with another person. But I just look at it as trying to remember which bars signal that it's going to be a reversal and which bars signal that we're going to stay with trend. So here is a bear reversal bar, same kind of thing as the one that we just looked at, but just in the opposite direction. And in this case, you'll see this looks like we were in a trading range right here. And then all of a sudden we have this bar that has a large top wick, not a very big body, not a very big wick on the bottom. And it indicated that we were going to start heading down for a pretty substantial trend downward. Here is on the left is a case of the same type of thing where we went from a bull trend into a bear trend. But in this one, it shows us that the bar is still green. So it's still a bull bar, but it is giving us an indication that it might turn bear because it's got that really tall wick on top. And all that means is that price like tried to go up, it tried to go up, tried to go up, and it couldn't stay up. So it started to go down and it closed much lower than where it went during the middle of the bar. So that tells us that we are losing steam. We are losing upward steam. We couldn't keep price up here. So that's a pretty good hint that maybe a shift in the trend is coming. And you can see it with either like two green bars or a green and a red bar. But not all reversal bars are just one bar. They can happen in a series of multiple bars. For example, one of my favorite is the double bottom. It's just two bars of opposite color, like bull bear or bear bull. opposite bars that are almost the same size right next to each other. They kind of look like mirror images of each other. The one of them might have a wick or not. We'll get into the details about the wick in a second. But here's some examples. Okay, so these are some double bottoms, and a double bottom means that trend has come down and now trend is about to go up. Um, it's important to know that with all of these, it doesn't have to be perfect. Um, Close is close enough whenever it comes to trading, is a saying that Albrecht likes to use. So if it looks basically like a double bottom, but it's not exactly, then it might still act like a double bottom. So this one is not exactly, they didn't exactly finish at the same time. They don't exactly share the bottoms, but it's pretty close. And you can see how it basically acted just like it was a double bottom. Um, some of them will have larger, lower wicks, and that can be okay sometimes. You'll see in this case, it was okay, and we continued with the trend. And some of them will have small or no wicks, like these right here. And you can see this one worked and it resulted in a reversal of the trend. But sometimes these you will see a double bottom on the chart, but it doesn't actually yield a reversal. So let's look at some examples of that. So this one, we had a double bottom. They both finished at about the same point, or they like where this one closed, this one opened. However, there was a larger upper wick on the bull bar, and I find that that's not as good of a sign. Because what that means is that as price was going, price went up, 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 and it couldn't stay up here. So it closed a lot lower. A small wick is fine, but I find that if it has a larger wick, that means that it doesn't have enough momentum to go up. And that's what you need in order to reverse the trend. This one had a smaller bull bar. So you see how right here their bottoms are equal, but the red bar is larger than the green bar. And I have just found that that is not as good of a sign as whenever they're closer to equal. Or like in this case, you see how the green bar was larger than the red bar? That can sometimes be okay. And here's another example where the green bar is larger. And this one, it did reverse, but it only reversed for like a very short amount of time. If we looked at this as like this could have been a trading range where we came down, we went up, and then we started down again. So sometimes it looks like it's going to create a reversal, and it does, but it's not the reversal you're like hoping for. It might just be a reversal on a smaller time frame where it's a smaller like you have to remember that the markets are fractal. And so there's going to be like small little reversals and there's going to be big reversals. So we can't always tell which one it's indicating. So you have to keep that in mind. And then sometimes the reversal only lasts for 2 to 3 bars, but it's still a reversal. This one is a good example. And here's an example of, the double bottom wasn't exactly perfectly even, but it still did result in somewhat of a reversal. And we also had some wick on top, and we also had a green bar that was larger than the red bar. Okay, but we came up and then we had a little bit of a pullback, but then we still came up again. So I would still count that as a successful reversal. And if I had entered on this bar, I would still be happy. I would have made a profit off of that trade. This one looks like it was less of a reversal, but it still did create somewhat of a reversal. So sometimes it might just be a pullback and not a full reversal on the chart that you're looking at. So this one reversed for 3 bars and then we started to go back down again. And again, look at this one. It had a green bar that was substantially smaller than the red bar and it had a large wick on top. So that is a signal that this double bottom might not be as strong as, for example, this one. And that might be why this was only a small pullback. Okay, so here's a couple of examples where on one day we had several different places that you could call a double bottom. So here's one that you could call a double bottom, but then it was like we had a double bottom, it went up, and then it immediately made a double top, which we'll get into in a second. So it's just kind of going up and down and up and down. And I guess it's sort of like a trading range right here. So we went, this one failed. We went double top. The double top did give somewhat of a reversal down. And then we had a double bottom right here. And this one did go up a little bit, but I would consider that like a very weak reversal, but we did go up a little bit. And we have a bit of a trading range right here. And then we went down. And here, I would say this one is a pretty strong reversal. And you'll notice we have a green bar that is fairly big. It's not as big as the red bar, but it's, substantial. And it has a wick on the bottom, small wick on the top, but the wick on the bottom is larger than the wick on the top. So this one reversed for a good amount. You could have made a profit off of this one, I think. But then we did start to come back down again. And here we had another double bottom. And if you look, this one had a larger green bar than the red bar. So this one was a strong double bottom reversal. And there we go. But I think it's important to point out, so you might say like, oh, well, this second double bottom was better, so you should have held out for it. And if you enter on second entries, which I want to make a video on second entries, if you enter on second entries, then you would enter after this signal bar. But I want you to see if you did that, yes, it would be like you would be more safe and you would be more sure that the reversal is actually happening, but your room for profit would be a lot smaller. Like your profit would only be these 1, 2, 3, 4 or so bars. I'm not sure what happened after this, but there's not a ton of profit to be made after this huge bar right here. But if you had entered on this first one and held on, if you had held your stop loss, like maybe below this bar right here, if you had held on for this whole amount, then there is a lot of profit to be had. So I'm not saying that one is better than the other. Entering on one versus the other is not better nor worse, but just keep in mind what the pros and cons of each are. Okay, and then like I said, now we're talking about the double top, which is the same thing as the double bottom, but in reverse. So the double top is where we have gone up in trend, and then we have two bars that have almost equal tops, and then we start heading downward. Here's one example. Here is another example, and here's a third example. All of these I would consider to be double tops. And all of these I would consider as successful reversals because you could have made profit on each one of these reversals. So, what about when do these fail? So, sometimes something could be considered a double top, but it doesn't actually lead to a profitable reversal. So, this one, I mean, maybe you could have counted this as a double top because these two have equal tops right here. But I want to point out that this bar prior to it actually wicked up higher. So I like to count my double tops as whenever it's like created a new high and it's higher than the prior bar was. So this one could maybe be called a double top, but I wouldn't trade it as a double top. And as you can see, it didn't really lead to a substantial reversal. I would say this is probably like we're in a trading range right here. And I mean, there was somewhat of a reversal in that we did go down, but then we came back up again and then went down. Okay. So what about this one right here? This one looks decent, I would say. The red bar is larger than the green bar. We have a double top. It did create a new high. All of the things, all of the check boxes are pretty good for this bar, but we don't end up having a full reversal. And sometimes that just happens. So, I mean, technically, maybe you could consider it that it did have a reversal, but it was a reversal on a different time frame. And maybe if you were trading on a shorter time frame, you could have made money off of it. But on this particular time frame, I don't think you could have made money off of it. Okay, this one started, I would say this one looks like a good double top. We have created a new high. The tops are equal. There's good size, all of that. It checks off all the boxes. but we didn't actually reverse downward. So I think this is an example of yes, we did reverse, but instead of going from bull to bear, we went from bull into a trading range right here. So we probably could not have made a profit off of that trade, although it was still technically a reversal. Now, next we will talk about 3-bar reversals. This one is basically a double top or a double bottom, but there's going to be a bar in the middle of those two. And it could be a doji bar like this one, or it could be just some other small bar. It's just basically an unremarkable, unimportant bar that's in the middle. So here is some examples. This one has a large green bar up, and then it has a small red bar, and then a large red bar down. So this one you could count as a 3-bar reversal, and the reversal goes down. This one, similar kind of thing. We went up with the green, and then we had a doji bar here, and then we start to go down with the red. And this one was successful. Now, I will say, you see how this one had like a large tail down? Or a large wick down, I might would have like, if I saw that bar, I might would have been a little bit hesitant to enter because we tried to go down in price and we couldn't stay down here. We had to come back up. But I mean, it just goes to show you that this one did work. So sometimes the bars don't look perfect, but they still do work. And we'll talk about that at the end. Next is an inside bar. So that is just a bar that is within the top and bottom of the bar before it. It's a smaller bar than the first bar. So you can kind of see it as this red bar is inside the confines of the top and the bottom of this green bar. So let's look at a few examples. This one, we had a trend that was down. We had a smaller red bar, but then an even smaller green bar that is within the confines of the red bar. And then we start to go up. And then here we had a trend up. We had a green bar, and then we have a red bar that is within the confines of the top and the bottom of the green bar. And then we start to go down. And again, these don't always result in a reversal. So this one had 4 inside bars. So there's this large green bar, there's a smaller red bar that is within the green bar, there's a smaller green bar that is within the red bar, and there's a smaller red bar that is within the green bar. So 4 insides, and after that, we just continued up. And sometimes the reversal can just be a small reversal. So on this one, we had gone down, we had started to go up, and then here we had a large green and then a small red, and then we continued. Well, so yeah, I would consider that that one is still like that one did reverse, but it was just we reversed from this smaller trend, which ended up being an overall continuation, but it was still a reversal when you look at this part as being a pull back or a pull up. What would you call that? I don't know. Okay, so we also have inside bars, which is kind of like what we looked at on the previous slide. Or we also have inside, which is what we looked at on the previous slide. And these are just multiple inside bars. It could be 3 in a row, it could be 4 in a row. Here are some examples of those bars. This one has 3 insides in a row. And if you look at it, this kind of did result in a reversal. It's not a very like steep, strong reversal, but it does look like the trend overall made a climax and then started to come down. Oops, I went backwards. Now this one is a 3 inside bars, which is called, even though it's 3 inside bars or 3 bars, it's called an inside because this one is inside this one and this one is inside this one. Okay, so this one, it looks like we were in mostly a trading range, and then we had our 3 inside bars, and then we started to go down. In this one, um, it looks like we were in somewhat of an up. We had 3 inside bars, and it looks like maybe we started to go down. In this one, it looks like we were going on an upward trend. We had, let's see, this is actually this red bar is inside the green bar. The green bar is inside the red bar. The green bars, yeah. So we had, I would say that's, yeah, the inside. And it looks like we went from a bull trend into, looks like a trading range, although it could have been a continuation. I'm not sure. But it looks like right here is a trading range. So I think that these are not as strong of a reversal pattern as the double bottoms or the 3 bars that create a double bottom, or even the singular reversal bars. But they do kind of give you a heads up that hey, something might be happening. Now, this is an inside outside inside bar. Okay. So let's go through what that means. That means that this green bar is inside this red bar. Okay. This red bar is outside of this green bar. So you're always, when you're calling it inside or outside, you're always looking at how it is in reference to the prior bar. So this one is inside of that one. This one is outside of that one. This green one is in. No, this green one isn't inside anything, but I guess it would be outside. But the red one is inside the green one. That's kind of complicated, and I don't know that if I was, like, watching a chart, I don't know that I would necessarily, like, see this immediately. I had to go looking for these, but inside, outside, inside bars. The inside, outside, inside bars often signal that a breakout is about to happen, and you kind of need to watch the bars and see in which direction the breakout might go. It doesn't necessarily mean that it's going to be a complete reversal. It could be that you are going to continue the trend after this small trading range, but think about these as individual trading ranges that happen. Like this one was a trading range inside here, and then this happened, and then this one was a trading range inside of here. For example, this inside one right here, if we looked at this on a higher time frame, it would make a sideways triangle where our top trend line and our bottom trend line are converging, which is a setup for a breakout to happen. And you just need to watch to see in which direction the breakout's going to happen. In this case, the breakout went up. And finally, the exhaustion bar. So, this is a bar that is larger than the previous trend bars, and it can mean that you are in the last ending part of a trend. So, this is just like the trend has been happening, and this is just like giving all of the effort that is left, all of the momentum that is left in this particular trend is just exhausted. So, this is a good example right here. We were going down, we had some pretty strong trend bars, but at the end, this was a really big bar, and that just signaled the end of the trend. Now, the difference between a strong trend bar and an exhaustion trend bar is relative. So, you need to look at the other trend bars to see if it's just strong or if it's exhaustion. So, this one is strong because it's large. It's not that much larger than this one, but it is large and it's at the beginning of the trend. This one's decent. This one's decent. But this one is just larger than any of these bars that we've had before and larger by a good margin. So that is what can give us a hint that it is not a strong trend bar, but an exhaustion trend bar. And after an exhaustion trend, especially if you see a small bar in the opposite direction after an exhaustion trend, that can let you know that a reversal might be happening. Okay, but with all of this said, remember that markets are fractals. So the 5 minute, I'm always looking at the 5 minute time frame. So all of these pictures were from the 5 minute time frame. But remember that the reversal can look different on a different time frame, but it's still going to be a reversal. And let me show you some examples. So this is all the same reversal, all four of these, but I'm just showing it to you on different time frames. So this is on the 1 minute time frame. You can see the red bars are kind of like spread out. And then at the bottom, we have, I would call this a double bottom. On the 2 minute, we have a double bottom, but it just looks a little bit different, but it still works. It just looks different. And then on the 3 minute, this looks like a single reversal bar pattern. And then on the 5 minute, it looks like a double bottom. So you can see all of these work. They just look a little bit different on each time frame. So it depends on what you're looking at. And another bar that I want to point out to you is the shaved head bar. So if a bar in the direction of the trend, like this trend is going downward and it has no wick going downward, that tells you that there was a lot of momentum at the close of that bar. So it did not go, like it didn't try to go further and couldn't make it and then go back up. Like it had a lot of momentum going down. That's a pretty good indicator that the trend is going to continue in that direction for a little while at least. And I don't really see any other in this particular chart, I don't see any other shaved heads in that direction. And so, like, for example, there's a lot of these green bars that don't have a bottom wick, but that's not necessarily a shaved head. The shaved head for a green bar would need to have no wick on the top because that's the direction of the trend. Um, yeah, I mean, this one, I guess, would be another shaved head in the bear direction, but I'm not seeing any bull shaved heads in this example. But you would see it like this one is almost. You see how this one has like the tiniest little wick right there? I would still probably count that. That one is a pretty good indicator that we still have some momentum to continue upward for a little while at least. Now, after talking about all of that and discussing all the details of bars and signal bars and what they mean and all that, I want to give you this huge caveat because it's not as important as it might seem. Because the best trends are gonna have the worst signal bars, and then the worst fake outs are going to have the best signal bars. So, what that means is that a lot of times the perfect if something looks like the perfect setup, it's gonna fail because it just looks too perfect. And a lot of times if something looks like a really bad setup, like the bar doesn't look like, this is gonna do very much of anything, it can actually be a really big reversal. Like some of the huge reversals that you see, those have some of the worst signal bars. So take all of this information about signal bars and trend bars and reversal bars, take it all with a grain of salt because it's good to know, but you still need to know all the other parts about how to follow the trends and it's just it's not the end like, candle bars are not the end all be all, you cannot trade on just the looks of a candle bar alone, at least I don't think you'll be very profitable if you do, because candle bars can be wrong a lot of the times. But I still think it's important to know this stuff because it's like another little building block that will help you in understanding all of trading. So I hope that this tutorial was helpful. My next tutorial that I have lined up is about bar counting and second entries and kind of like finding out when to enter. So if you're interested in that, then stick around for the next tutorial.